It's okay. I'll cut the first little bit out. Okay. All right, guys. Welcome back to another episode of Business Talks. Today we've got two realtors. Actually, no, one realtor, one mortgage broker.
Don't do me
Sorry.
like that.
It's funny because I messed that up in private too. We've got, of course, we've got Karnveer, who's here every week with us. And then today we've got a guest, Keaton Kirkwood from KB Mortgages. Thanks for joining us this week for the podcast.
Maurice, thanks for having me.
Appreciate it. Appreciate it. So, guys, like one of the main reasons we're doing this, oftentimes I share data and stats about real estate on my Twitter and on my Instagram. And of course, guys, we know for the last 4 or 5 years, all anyone's ever talked about in BC is real estate. All anyone ever cares about is real estate. So it tends to be a hot topic, even when the market's going down. Like it's still being talked about.
Times in BC, right? There's making money off the market going up, and there are those that predict the market is going to crash.
And that's what it is. So it's always such a hot topic, and I felt like we needed to do this for the audience, but also for my own, personal reasons, because I genuinely enjoy this stuff, and I find I learn more if I talk to experts and people that are in the space about it as well. So, Keaton, you're our new guest for the week. Do you want to do a quick little intro on yourself and tell us a little bit about yourself?
Sure. I'm a mortgage broker, started in 2015. I started out as an unlicensed assistant, worked my way up on a team till I was the number 2 person next to the owner. We were second in the country for working with real estate investors, 18th in the country overall. Went out on my own a week before my first child was born. We won Rookie of the Year across Canada for Dominion Lending Centers, hit top 2% of brokers, briefly hit top 100 in the country for DLC, and then we left and started up our own brokerage. We specialize with real estate investors and tax strategies like the Smith maneuver to kind of make ourselves different. But at the end of the day, I'm 33, so happy to work with someone buying their first home or whatever. But what really makes us different is that I'm not the prophet. I don't know the future. I don't try to pretend that I can give clients the magic solution. We focus more on breaking down the pros and cons of choices and giving people the ability to make an informed decision with kind of expert guidance, rather than, hey, Karn, take the 5-year fix. That's the right choice. Like, as we learned with rates going up a couple of years ago, nobody knows. Bank of Canada says rates will stay low for the foreseeable future. 6 months later, record-setting increases. So I'm a believer that we have to weigh pros and cons and make balanced decisions more than, someone's got the magic 8 ball that's going to predict the future.
Mm-hmm. Yeah, that rarely happens, right?
Hey, if you guess enough, you're right once in a while, but I'm not a fan of betting on that.
Right, exactly. So, yeah, I think it's funny that you mentioned trying to predict. I think a common question I get is like, what's going to happen in the market? What's going to happen in real estate? If you go on Twitter, FinTwit, like it's all kind of scattered. Some people are predicting a doom and gloom, and the others are like, no, it's going to be another bull run. Market's picking up, 30 offers on a house, rocket ship, like it's going to go to the moon. So it's just so polarizing. And I think what I have a hard time finding is like really balanced perspective on real estate and asset classes, investments, all that. So the reason we're doing this is so that we can talk about this stuff in a balanced way. So we're not like misleading or overly intensifying one particular viewpoint on real estate in BC. So
I think that's a pretty strong argument, though. Like, one of the things I try to focus on is looking at the data that's out there. And I'll be blunt. I do not believe that real estate values in BC and Ontario going up is good for Canada. But I do believe that barring some sort of, insane economic meltdown, it will continue. And there's a lot of data that I base this on. CMHC in June of 2022 came out with an affordable housing study. And there was a few things they determined. And we know June 2022, it's a study, so it's looking back. This is before we really started to hit record levels of immigration. This is really before a lot of changes happened in Canada, like rates really going through the roof. One of the things they concluded is that approximately 2.3 million units of housing will be built from 2022 to 2030. They came to the conclusion that an additional 3.5 million units of housing are needed to try to hit affordable numbers. So that's to get to about 44% of the median income in BC and Ontario. They determine the other provinces aren't as bad. But at the end of the day, everywhere in Canada has a common issue, which is shortage of housing. The next step in this study.
So what is causing that? Because like everything I read about all this immigration happening, there's so many people coming into BC, and we're just not having enough starts from what I find on the internet. I don't know if that's correct.
Yeah, so basically, I'll just run through this real quick because I think this sets a good foundation for the conversation. So we need 5.3 million units of housing roughly. We're somehow supposed to do like
0.30?
150%. Yeah, it's 2.3 plus, was it 3.5? So I suck. I'm not a broker. So we need to do over 100% increase to the number of housing units being built. The next part of this study is they come to the conclusion that we are at a 25-year low of construction workers relative to those 2.3 million units of housing. So the number of construction workers per unit being built, 25-year low. With that, we're somehow supposed to double, more than double, our creation of housing units overnight. The next thing that has happened is that housing starts have fallen year over year due to rising rates. On top of that, we've now set record pace of increases for immigration and for population growth. So, and then the final straw was in the summer of 2023, BMO did a study and they surveyed people that were considering buying. And I believe it was 67% of Canadians that said that, no, we've put buying on hold until rates start to recover. Over the last 120 days, bond yields have dropped and fixed rates have followed almost a 1% drop. So everybody focuses on the Bank of Canada meetings, but the Bank of Canada is more political. Bond rates are controlled by basically big banks, billionaires. It's all about money. So it's a little bit more honest with the economy, if you want to call it that. Whereas the Bank of Canada is a little more politically driven, even though they're officially not. At the end of the day, rates are already coming down. We're seeing the market start to sort of life. And I think that all of these factors put together kind of leads to the logical conclusion that if the majority of buyers putting things on hold, rates going through the roof, carrying costs becoming unsustainable, if all of that didn't crack the Canadian real estate market, I don't think what happens in the next 3 to 6 months is either, barring some sort of major meltdown. But I think it also highlights that there's fundamental issues here. By all rights, our market probably should have fallen more than it did. But we've got this huge pressure of being a renter sucks. There's no stability. There's no predictability. We're seeing landlords forced to make more and more aggressive moves, living in units, tearing them down to bring rents up because you just can't own something that runs in the red. But they're not willing to sell. And ultimately, I think that this is going to push more and more momentum as people realize that it's not going to crash likely. They'll become buyers. We'll see the market surge more. And then it's going to be a race of what's going to happen. Are prices and rents going to hit a level that they're truly unsustainable? And we'll see, kind of a pseudo revolt, which will finally crack things open. Or is the government and the municipalities and, people in business like ourselves, are we going to figure out how to create these housing units faster and start to eliminate this gap? But I always use the analogy, imagine you're at a concert in the middle of August and there's 500 people there. And finally, the concession stand opens up. Everybody's thirsty, but there's only 250 bottles of water. It doesn't matter if they charge $20 a bottle of water. At the end of the day, if 500 people want it and there's only 250, there's always going to be this demand where you don't, even if 250 of those people are like, that's outrageous, I won't pay that. It doesn't matter as long as there's enough demand to meet the supply. And while we have very reduced supply and we have population growing, I think the market's going to be really, really stubborn. And I personally do not believe it's good for Canadians. It's really not. I don't think anybody wants to see outrageous rents, outrageous prices. But what do we do about it? That's, I think, the biggest thing we can do as professionals. We need to talk about this. Sooner or later, someone smart's going to come up with a solution. Probably not me, but hopefully I can help spark the conversation that leads to that solution.
So Keaton, there's something that you mentioned that was interesting. Increase of immigration, people looking to buy affordable housing, but rents are also increasing. Housing, because of construction workers, has gone down. The municipalities are now passed, like for BC, they have now passed that you're able to get multiple dwellings units on one property. You can have laneway access homes. You can have a secondary suite within a home to help with alleviate the pain for renting, right? Do you think that's actually some sort of a benefit that will help renters and kind of alleviating the cost of bringing everything down when there's more like tenancy availability?
Well, it's tough, right? They're trying to use private business to solve this problem. And we're seeing like parts of the States, lots of Canada, like Edmonton just completely eliminated its residential zonings. R1 to 4 or whatever it was went to like just basically general residential zoning. And
So ours went away from single family to for higher density.
Yeah, so what they've done is every single residential lot in Edmonton that is just a generic, they've made them all residential, just residential one, we'll call it, allows up to 8 units and 10 meters of height. So we're seeing this everywhere. This isn't just BC. It isn't just Alberta. It's everywhere. It's happening in the States. The problem is there's no construction workers to build these units. So we're probably not going to have like a build boom because no one's there to build it. So I think that that is going to encourage more systematization of things. So we'll probably start to see more like ready build. They need to figure out how to basically put less skilled labor in a unit of housing. That's
Yeah,
really
get some modular homes that can be actually stacked on top of each other to get it built.
so. And I think we'll also see, we know the population's growing. So I think we'll see a lot of people step into trades. It could be
But
lucrative.
here's the thing, the immigrants that are actually coming from out of the country, they're the ones that are putting in the work. They're the ones that are taking the labor jobs because there's nothing else that they are able to do based on their education and skill level. So wouldn't it be the responsibility of younger generation of Canadian born kids to actually put in some effort to get the elbow grease going and actually make some money? Because we all know, like, I'm from a construction background. My family has been, as is a lot of South Asians. So a lot of our wealth is built through constructions. Why can't more Canadians just get to the fact of, hey, if we do put in a little bit more work, we can make multiple six figures versus just going to school and getting a job because maybe looking at somebody that's out in the trenches is looked down upon. And having a cushy job in a bank is a little bit better because you're wearing a suit and tie.
I don't know what the ultimate cause of it is. I think part of it is business interest, but like I graduated in 2008. I think we're probably all similar ages. And I had terrible grades. And I felt like because I was stupid, therefore I had terrible grades, that the trades is where I belonged. And I
Hmm.
actually spent a period of time working towards an electrical apprenticeship before I realized that I'd go crazy. And I ended up working in the oil and gas industry for a few years before I got into this space. But there was a huge cultural shift where at least my parents' generation was get a grade 12. If you get a grade 12, you're good. You'll make a good living.
GED diploma is good to go.
Yeah. And then my generation was taught that no, you need a bachelor's. And that was the basically, at least I felt growing up. I can only speak from my own experiences, but that if you didn't get a diploma or a bachelor's, you were stupid. It was basically everybody will go to university if you have any ambition. And you know, the kids who smoked pot and were terrible at math, they went to trades. That was literally how the counselors treated us. But fast forward another decade, and we see all these people with fine arts degrees and non-STEM related degrees, and they're struggling. They've got a lot of student debt, which there happens to be a business interest there, and I think that's a big piece of it. But I think what's happening is the current generations that are growing up, they're realizing that a degree in fine arts or an English major is not going to inherently get you a good job.
Mm.
And I think what's happening as well is we're seeing businesses, there's been such a glut of degrees that a lot of businesses don't really care anymore. They're kind of like, hey, a degree is a bonus. And, maybe we'll say we want to see it. But at the end of the day, hiring's being more based on skills, aptitude. Even as a business owner myself, like I would rather hire someone who's 2 years out of high school and is like, hey, in these 2 years, I traveled, I started up a business, I spent, I built up a YouTube channel of 2,000 people, whatever it is. I would care more about those applied skills and showing that, they defined a goal, they pursued it, they learned, they set a new goal, rather than someone who's like, hey, I got an English major.
So we went from getting high school diplomas to getting university degrees to now you don't really need to go to school to accomplish the things that you need. You could just learn it off of a coach, off of a mentor, go to YouTube, find some sort of
There's
a program with
programs that have like
community,
full-blown Ivy League university degrees that you
and
can
they're all
get. You
there
don't
for
get real
199.
credit,
They're
but
packaged real good for like 3 months. You could hire
Mhm.
a coach for like $200 a month and get more information or get value from that information to do a startup that you necessarily wouldn't be able to do from a business class going to university because those books are so outdated.
Well, I think all of us have a collective interest in marketing and kind of growing, helping people through an online presence, and we see how quick it evolves. Is a university professor who did it at some point going to have like technology is evolving so quickly that I think that certain fields, at least, people are realizing there are better ways than a degree. And I'm not here to knock post-secondary education, but I do agree with you that there was a stigma, and I don't know where it's at now, as I'm 33 and I'm probably out of touch. But there was a stigma and may still be a stigma for a period of time that trades were lesser. Well,
Yeah.
now we're reaping the rewards of that. We have no tradespeople, and we're realizing, oh shit, we need those people. And those are great careers that pay quite well. A
So
journeyman
I,
electrician can make as much as a registered nurse.
yeah, so I just want to add, so the biggest problem, it seems like Canada-wide, is lack of housing, right? There's just an inventory shortage. Is that
We
the,
have the lowest housing per capita in the G7. So this is like a real, like this is a real thing. We have the least number of housing units relative to people we have in Canada in the entire G7. We also have the fastest growing population at G7. So,
Gotcha.
you
So
don't have
they're
to
like
be.
they're pushing us to the extreme because we're bringing in all these people, but we're also not increasing housing starts, right? So okay, so here's like the two potential solutions, right? So solution one is build more housing, right? We already have crazy immigration, so if we're bringing people in, why not bring in tradespeople that have the skill set to then build more housing for people to live in? So that's the first solution I see is like, hey, why don't we increase get rid of some of the red tape around building and allow people to build faster, quicker, with less restrictive, permitting process, all that stuff.
The
Guess that's
biggest fight for developers and any contractor is having to get permitted, having to go to the city hall to get permitted all
yeah.
across Fraser Valley, Greater Vancouver. Their biggest fight with the city people is why can't you guys just find a way to streamline it? Either A, hire more people and get it streamlined, or just make it easier instead of having so many things, so many rings to jump through. Because at the end of the day, city halls, I'm assuming they're all not for profit. They're just paid by tax dollars, and everything is off of a budget. However, what's the point of keeping a budget if there's going to be hundreds of people that are homeless? There's videos that we see online all the time of like students or kids from different nationalities that are living on the streets because they cannot afford going to school, eating, and affording housing. So they forego the housing and they're just living couch to couch or on the streets, right? And these are kids with good backgrounds. Like they're not doing drugs or drinking alcohol. They're literally just trying to get by and hoping that they can find some sort of vacancy that's not going to push them out, push the money out of their pockets even further. Because universities are charging them arm and leg 4 times the amount of what the average is paying per credit is 4 times the amount. When you look at some of these semesters and these quarterly payments for school, they're outrageous. I don't think a regular Canadian or American can actually understand the hardships that a lot of these immigrants face when they're just basically trying to get an education. Like, forget about everything else. Forget about how their survival is. Just paying for school, it's atrocious. And our own people, like our own Canadian kids, are having a hard time renting or affording a house. So it's not just like one problem, it's like problem across the board. What the hell is happening with all this money that's being collected? Taxes, they're increasing I was reading, I don't know if it was Nova Scotia or Prince Edward Island, but they're increasing taxes, property taxes by 48% or something. It's an additional $2,000 a month. Huh? Which one was it?
Serious.
Yeah. And same thing with BC and Alberta. They're increasing the taxes, they're increasing the property assessment values. What's happening with all this money? Like, why aren't they able to just add a couple additional engineers or add a couple additional planners within the city to make some changes? Big date that's coming up is June 24th, 2024, or June 6th, 2024. It's in the month of June is when the single family zoning is going to be changed in the OCP and getting renamed to like multi-density. That's when it's going to really take into effect, because in the last, I think 30 or 40 days, there's been about 18 applications once they made the announcement that you can have multiple dwellings within one property. You can get that available for you. That helps the homeowner, that helps construction, that helps push people into the right direction of getting something at least affordable for renting.
100%. I think one of the challenges is that, because there's a few things you touched on, but Canada has close to the same number of foreign students. I think we're 900,000. The States is about 1 million. So why does a country with a population of 40 million people have the same number of foreign students as a country with 380 million, or whatever the States is?
They're just cattle. It's money. It's a cattle. It's a cattle for money. Like, they get first dibs on what classes to attend. Not us living here. It's them, because they're 3 or 4 times the amount.
Right. So I think the problem is that it's okay to have business interests, but business interests cannot come ahead of just common sense, what makes sense and what is fair.
Yeah, bring people in, but don't give them housing.
Tear it down.
Mm-hmm.
But I do know they are making some changes. I don't know the exact data, but I believe is it 8 housing designs that they're basically pre-approving in BC that will be fast-tracked. And
the one is 3,000 square feet and within 10 meters of a bus zone or like a zone for busing, you can get a single family house, one dwelling, and then a laneway home. And then when you get up to like 4,000 plus or 5,000 plus square feet, you're getting to 6 to 8 units on the lot, right?
But
So
yeah,
like,
I think like even again, I just think about it as let's say they say, okay, you can build 6 units. The construction itself still takes time. So it doesn't solve the
other thing,
problem. You're just saying, hey, now you can
yeah,
put multiple dwellings here, but oh,
it's a band-aid effect.
we're still
It's
short. We're still short for labor, and we still have too many people. It doesn't solve the problem. It's not
And
a
the
quick
cost is
fix,
still going
right?
to be high because of inflation. So the cost
Yeah.
for supplies is also increasing. The cost for
That's
copper for electricians has tripled in the last 2 years,
Mm-hmm.
right?
You know what I think would actually solve the problem is if the government stepped in and decentralized the whole building process where like if you're a homeowner, let's say I own a house in Vancouver and now they passed this law that says I'm allowed to build 4 units on my lot here, okay? What if the government actually helps me, creates a whole department that helps me renovate my own home so I can benefit from this and then also help me finance this project. So now I'm creating dwellings and the government's helping me do that. It's just decentralizing the build. Anyways, that's food for thought.
Yeah.
I think it's always a tricky balance, right? General as a generalization, I think the government in many parts of the world has proven to us that the business side of things tends to operate a lot more efficiently than the government does. But the problem is the business side of things typically is less concerned about, say, social welfare. So I think they do need to try to find some sort of balanced solution. But I think part of the issue too is that we're constantly pushing for higher efficiency standards, but we all have to accept that if the total economy is this big, the cost of building housing units for the population cannot exceed this size. The reality is the amount of resources and money that we invest into housing is only ever going to be a smaller piece of the total economy. And part of the issue is that the efficiency standards are pushing forward, and I think it's absolutely great that they're trying to do a global warming and focus on more efficiency. But what is better? To be able to build housing units, let's say, for half the cost that are 80% as efficient and solve people on the streets. Like I have two family members that have been homeless for 20 plus years. Like I feel it, I know it. And it's hard. And it's hard to solve, especially when you get mental illness and drugs, which we've got a lot of problems in Canada to solve. But I think one of the things they need to look at is in a crisis, which I do believe they're labeling the housing issues now. When do you stop forcing developers for affordable housing to put triple pane windows in, and allow more readily available lower cost solutions? Like, hey, I'm not saying put people in slums, but what I'm saying is, does the quality of a home make a difference, double pane versus triple pane windows? Does, increasing the shingle that needs to be on the roof to last for 50 years instead of 30 years? These things are like, they're going to have to figure out compromises they can make to make construction faster, lower cost, and more accessible.
Yeah, I agree. I agree. I think always around housing, there's so much red tape that slows everything down. It's insane. So Keaton, what is your like outlook for, I guess, this year? Let's just say, I know you don't like to make predictions. I know you don't have like the magic 8 ball, but for 2024, from what I've gleaned from the first little part of this, is that you think that the housing prices are going to be very stable. Is that a fair assessment?
Where you look. So I'm licensed in BC and Alberta. I think that what happens in BC is going to be very different than what happens in Alberta. Also, even at the BC level, what happens with entry-level condos and townhouses versus $4 million houses in Kitsilano and North Van? You're going to have a lot of different like microcosms of behavior because we know that inflation disproportionately affects people that are lower income, but we also know that the lending system, it will allow a high income earner to be more vulnerable because they use a percentage of your gross income. So they don't factor in your tax rate deductions. So a $80,000 a year earner who's maxed out in the lending system will have half of the disposable income that a 400K earner will have who's maxed out. Now, you would assume 5 times the income would have more than double the disposable income after cost of housing. But so the lending system is not perfect and has vulnerabilities. And I genuinely don't know how that will play out. But I do believe that it is going to be, sorry, a cat attacking me. I do believe that it's going to be, we can't just use a broad brush to paint Canada. We can't use a broad brush to paint BC or Alberta. I do expect that we'll see like the average house price in Edmonton, as an example, is about $424,000 for a detached home. That's the average. I expect we'll probably see that rise. You can get townhouses and condos for like $100,000 to $225,000. I expect that will rise. But I also expect that we'll see a very stagnant market likely in, let's say, North Vancouver, at least in the detached market. But overall, I think the common theme is going to be that being a renter is punishing. Like a renter has less commitments and more freedom, but also has less stability. And so I think all in all, that's going to keep pushing people to wanting to be owners. The problem is that, as an example, being licensed in 2 provinces, the clients that I deal with are very different in BC. They're generally professionals or people that have been given a fair bit of money from their parents. They're higher earners. Whereas in Edmonton, we deal with a lot of those tradespeople we were speaking with earlier, just regular people. And it's not I guess the best way to say it is it's a system or a factor of the housing prices. You can buy a townhouse in Edmonton with a $60,000 income and 15 grand in the bank. $60,000 income and 15 grand doesn't get you a house in Prince George. Right? So I think we're going to see a lot of population swings, and ultimately though, I expect that the market's going to keep going up simply because rates are dropping. At the end of the day, it's all supply and demand, and there was a element of fear holding people back, which was high rates and the unknown. As rates drop, and if people accept that the housing market's not going to crash, I think we're going to see them return to the market. And we noticed that even though the market softened, inventory was very low in most provinces. So at the end of the day, low inventory means a seller's market. If buyer demand returns, we're going to be back to business as usual. I don't want it. I don't think it's a good thing, but I do think that's what's going to happen.
Yeah. Katon, what about you? What are your thoughts?
I couldn't agree more. And you know what? Speaking of Alberta, they have the most transient city for people moving from outer provinces into Alberta. The number is 17,000. So you could just imagine 17,000 people left to move into like parts of Alberta for affordability. And now the funny thing is we actually have sales teams that come in from different parts of Calgary and different parts of Edmonton to do their presentations in Vancouver and in Toronto, because they're trying to pick up buyers from here because they know that we have money to invest in their projects. And some of their townhome sites are not cheap anymore. Their houses are not cheap anymore. I can't find a decent house around 400,000 or 500,000 if you want to get close to even the city core. You're looking at
Calgary.
Well, there's parts of Edmonton, there's parts of Calgary as well. And the one in Calgary, the project that was showcased in the last summer, townhome starting at $699, and they're saying this is the best value townhome you're going to get. And there were like 1,700-1,800 square foot townhomes. I don't want to say no names of the developer, but they essentially got them sold out because they had buyers from Vancouver and Toronto, because you can't find a townhome under $999 anymore, brand new. And these townhomes are small. So you're saving $300,000 for people wanting to buy in places like Alberta. And they're obviously giving, I think sometimes there's like false expectations of you're going to make your money or somehow you're going to cash flow off the back of, again, the students close to these universities, because we just want to wring them dry for every last dollar that they have. I think that's like socially, that's just not acceptable, right? We shouldn't just focus on taking the money from these people that are having the most hardships. But it is what it is. There's money to be made, and people shouldn't be too concerned with moving away from the opportunity that's available to them, right?
Can I show you guys something here? So I actually pulled this up earlier, just so that I could pull it up. Let me know if you guys can see my screen.
Yes.
Okay, so this is and I did email this to you guys, so hopefully you guys had a chance to review it. But this is the housing price, real estate pricing for detached homes, I believe, from 1987 to 1992. And then the red line here is the Bank of Canada's the rate. Okay, and so I know you guys think that the pricing is going to be stable. I actually think it's going to come down a little bit more. I don't think it's going to be a massive crash. So I don't think we're hitting those kind of delinquencies where things are just going to go crazy and everything's going to fall. But here you can see sometime between 1990 and 1991, probably somewhere mid-year, once the Bank of Canada rate started to come down, what happened was unemployment started to go up. And then the actual freehold real estate pricing actually started to follow the unemployment. So, you know, typically you'll see this in recessions where whenever unemployment goes up, housing prices come down because less people can afford housing. Does that make sense?
Yes. Okay. So you know what? I want to add to this. What is the equivalent of 25,000 or 50,000 in the 90s versus now, where houses are no less than 1.1, $1.2 million on average? Like what is the
Worse,
equivalent?
I would say worse.
$100,000, $200,000? What is the equivalent of them needing to come down? Because we have to take a look at two things. One, if housing, let's just assume that housing just in general, if single family houses, they got to come down because that's what everybody wants. Then that means the price for townhomes, they also have to come down, which means then now they're competing in the territory of apartments, and those apartments, they need to come down. Now, is it likely that all three different segments for three different type of parties, it's all going to come down where prices just range from 400,000 up to 1.7, $1.8 million? Like, is that a fact of 10%, which is for a $400,000 condo, $40,000 coming down? Is that 10% gonna be for 1.8 when it comes $180,000 down, coming down to 1.6? Like, is that the potential? And then the other thing is, when we look at this, I also got to think about delinquencies and people defaulting on their mortgages. How likely is that to happen? And when I'm looking at data for that, I sent you another graph as well. Just like it kind of just came up. The delinquencies are some of the lowest. And Keaton, maybe you can talk about this as well, because there's conversations of how many months does a person need not to pay their mortgage for them to go into foreclosure or for the banks to seize their property to put it up for sale.
So there's two aspects of that. I believe the delinquencies report, I think it's 90 days delinquent. So we have to accept that you got to be pretty far behind. When we know statistically, it's 99 point something percent of Canadians make their payments on mortgages on time. That being said, there's always is going to be a band of people that are behind. The problem is that those reporting stats off memory, I don't have them in front of me, but I believe it's 90 days delinquent is what they report. So there could be a relatively large group of people that are struggling. But the foreclosure question is a little bit separate. It depends on who the lender is, how they're operating. So there are programs in place for insured mortgages, and the banks are also encouraged to follow this to offer leniency, interest-only payments, allow payment deferrals. They will typically try to work with distressed Canadians to allow them to solve the problem, even if the ultimate solution is selling their home before the
Because
bank.
they don't want to take on the property. They don't want to take on that liability because they've already lent out the money.
Well, imagine what happens to TD's share price if their delinquency or if their foreclosures goes up 400%. Because the thing is, it's so low right now, a very small increase. Like if it's 0.2, it goes to 0.8, which is still what, a fourth of what it was in 2008 and 9. That's a 400% increase. Well, you better believe the shareholders and all the doomsayers are like, this is the end.
400%. 400% just sounds so much crazier than going from 0.2 to 0.8, right?
Well, that's like, I think the bank account overnight lending rate was like a 400 or 500% increase. What
Yeah.
they leave out is it was 0.25% when it started. So of course it's a massive increase. It was basically zero. But I think that at the end of the day, it's personally, I don't think like we may see values in Kitsilano, North Van, Kelowna, Toronto come down in certain layers of the housing market, but are we going to see Saskatchewan, Calgary, Edmonton, the Maritimes, Quebec? Are their prices going to drop? Like, what's the average price in Edmonton is 424,000 off memory for a detached house. What's that going to go to? 300 grand? It's already below the cost to build or at the cost to build. How much below that can it go? So I think we'll see weird behavior based on the market and its own pricing and economic drivers.
Okay, so here's something that's coming up. So 2021 summer, that's when people were locking in these crazy low rates between 1% and 2%. Those 3-year fixed rate renewals are coming up and people are going to be pushed into 5.5% to 6.5%. Now, payments essentially going to double, or the interest on these payments for anybody that bought in 21 is going to double. Do we see 90 days from the summer leading into the fall and winter? Do we see people starting to default on their loans because they essentially got qualified with 2.5% with the 2% on top, the 200 points on top for protection. Now that's slightly above if the rates don't come down low enough, right? People barely qualified through the stress test to get these properties. Do you see people forcing the sale of their home to retain whatever equity they built to possibly buy something smaller? Or do you think they're just going to be able to kind of sustain that payment over time to keep the properties that they have? Because most people, the only way I see prices coming down is if you're forced to sell. It doesn't look like there's so much unemployment that's happening within these cities that people are really being forced to sell. A lot of my clients, they're like, if we need to hold, we'll hold, but we want the price that we want.
So most people who got those rates were taking a 5-year fix, so they're going to be likely coming up in 2026. I believe off memory, it's about 60% of people will take a 5-year term. So I just did the quick math, 1.5 to 5 point, what did I use? 5.2, which is where rates are at roughly right now.
Okay.
Like a low rate. So if someone had an insured mortgage, they would have got in that 1.5 range, let's say best case.
And what's the
Currently,
payment look like?
Sorry?
What's the payment look like? I just want to run some numbers just to have an
It'd be
idea.
about $1,700 for a $500,000 mortgage at 1.5%.
Okay. $1,700?
Yeah, at 5.2%, they would go up to about 2,700. So it's about a 60% increase. That's on a, let me see, what do I have on here? I think it's a 30-year mortgage. That's a 30-year mortgage. 25 might be a slightly larger increase, but maybe a 70% increase. The important thing to know, though, is that these individuals at the absolute low watermark of the stress test, they qualified at 4.79%.
Right.
Currently, on a 5-year fix, it's competitive for an insured mortgage. You're getting 4.99. So if rates continue to trend down, there's not going to be, like, there will be a real payment jump, but is it going to cause 50% of Canadians to lose their homes? I don't believe so.
It'll just make it harder for them because I think people that are stuck on or are living off of paycheck to paycheck, making that $1,700 payment that barely qualified, they obviously they just had enough to qualify for that amount. And now when the renewal happens, that additional $1,000 a month for them, even if it's like a couple, they need an additional 500 between the two of them, 250 a week. Do they actually have that? Is their lifestyle gonna suffer and then cause them to make a decision to want to sell? I think a lot of people, they take lifestyle over housing more, like they put more importance towards
Do they?
how they want to live. I do. Like I have a lot of clients.
What
Aren't they
percentage of
connected?
people in
Wouldn't you say they're
Vancouver would
connected?
sell their home and instantly retire?
Sorry, what would they do?
What percentage of people that are struggling in North Van, Burnaby, wherever, could sell their home or townhouse, move to, let's say, Saskatchewan, Alberta, pick your place, and oh, it's Alberta, but the point stands, they could sell their home, have a home with no mortgage payment, and hundreds of thousands of dollars in the bank. Yet that would be a lifestyle argument that anybody who chose lifestyle over home and location would do that. Now we are seeing a growing trend of it, but like move to Alberta. When I moved in, so I'm a little biased, everybody. I'm from BC, grew up there. I moved to Alberta when I was in my early 20s, moved back to BC, and then in May of 2022, my family and I moved back to Alberta. Because I try to practice what I preach, and I try not to overextend and have a lower cost house. And but when I did this in May of 2022, so I made the decision in kind of late 2021, everybody told me I was crazy. I was, oh my God, it's Alberta. How could you go there? But as we've spoken about many new Canadians, and the argument I used, and if I go back, or my wife's parents, most people in Canada came from somewhere very far away at some point.
Yes.
So my argument is whether it's you, your parents, your grandparents, if they can move across the world to come to Canada, why the hell can't we move across the Rockies where it's a $60 flight to get back? But I think that people are stubborn, and it's a community decision. At the end of the day, as you get more people leaving BC for lifestyle and cost, or moving to more rural parts of BC,
Yeah.
it's hard for the first people to go, but as more and more people go, it becomes easier and easier. And I'm sure it's I don't know firsthand, but I would suspect it's the same for immigration as an example. If you're moving to a country where you are going to represent a demographic that's brand new, and very, very few people have a common language, religion, culture, it's hard. Whereas, and I'll use an example of people from India coming to Canada. I think we would all agree that there are Indian cultures established in Canada now. And it's probably a lot easier for someone to immigrate here now, at least personally, than someone who maybe came 50 years ago, 40 years ago. And I think that at an interprovincial level, it's the same thing. You know, as your friends and family and community go, you realize, oh, it's not that bad. And at least you become more open-minded to it.
Yeah, I would have to agree.
But-
Raul, what about your people?
Not
They
moving
like
to
it
Alberta
here or they
anytime
want to
soon.
go to Alberta or what?
It's too cold.
50 below, people. It's balmy.
People, I
Yeah.
think it's too cold out there. People don't want to live out there. It's too cold. It's too cold. Here, I want to show you guys this this chart because this was floating around on Twitter, and I just pulled it up while you guys are chatting. But see if this can make some sense here. Okay, let me know if you guys can see the whole thing.
Oh, there we go.
Yep.
So this is the they overlaid the older time or real estate pricing from, you could see from 2006 to about 2014. And then you've got obviously current conditions, so from 2016 to like 2024. So you could, this is kind of causing a lot of fear on social media, on Twitter. And so what happened, obviously you guys can see here, real estate prices started to go up. And then there was kind of that little bit of a cool off. Again, it had a return to normal and then it cooled off quite a bit more, right? And so the argument is we're kind of going through the same thing where people are expecting the Bank of Canada to cut rates pretty soon, and for the price of real estate to either normalize or go back into its upwards pattern. But it's pretty hard to cut rates if inflation's still high, right? Because I think the most recent read for December was like 3.4.
Yeah.
And they were expecting it to be 3.1. So I think the market is overly optimistic that the rate cuts are coming. Though if something breaks, traditionally, if you look at all previous recessions, they do lower rates really rapidly as well, right? And so when they cut, they'll cut quick. But usually what happens is something needs to give in order for that to happen. Anyways, I'm not a bear or anything. I'm pretty neutral on the market. But I bring this stuff up because you guys have seen the stuff. Maybe you guys have seen the cycles. But what comments do you guys have on this?
There's two things that I look at. If you're in the market to buy and sell, you want to flip properties within 6 months to 2 years, then obviously this is important because there's a lot of money on the table. However, if you're looking for a home, you got a family and you're going to be there for the next 15 or 20 years, then whatever property that you're buying, you should be able to afford it based on what your income is and potential promotions. Because if we're looking at the graph, like drag your mouse from 2006 and take it all the way up to 2024,
Mm-hmm.
the bottom line, it still
Okay.
went up. It still went up over 10 years,
Mm-hmm.
right? 8 years, 10 years, 20 years, it's still incrementally going up. So regardless of up or down, it shouldn't really matter. Like I own a home, I'm sitting in my house. What's happening around me, it doesn't really bother me or affect me. Yeah, my payments have gone up a little bit because I never locked in my rates, but I'm able to afford it over time. So it's completely okay. It's completely fine.
Mm-hmm.
Now, if we're gonna sit here thinking it's some sort of a gamble and it's like sitting on stocks and you're so worried of what's happening on a daily basis, then I don't think anybody would want to invest. Anybody would want to do it with anything. I think the common denominator for like to compare stocks is what if we invested in S&P 500 20 years ago, 40 years ago, 50 years ago? Oh, the price is too high now. But okay, the price was too high 10 years ago. The price was too high 20, 25, 50 years ago. But we have to look at the potential for accumulation for long runs and be able to maintain that aspect. We don't want to look at what's happening in the next 6 months or a year. Can you afford it? Are you within the budget? Are you within the limits? Is your lifestyle being affected? Is your family being affected? Do you have savings? Do you have money to put towards the community? If all those answers are yes, then yeah, get the house because the next 5 or 10 years, you're going to live there anyways. There's always plans that I always put into play with different clients. For the investor clients, it's like, okay, pre-sales, flips, renovations. We need to move in, we need to move out. So we're looking at quarterly cycles of when is a good time to buy and when, like how soon we and quickly we need to get the property prepared to put it back on the market. And usually that's 3 to 6 months. Now, if it's going to be a single family, a house that maybe mom, dad, kids, maybe their in-laws or maybe their parents are going to be moving in with them. There's going to be about 6 people total. They're probably going to buy a house once and they're not going to think about moving for another 7 or 10 years. And in that time, I don't think anybody's looked back 10 years and said, I made a mistake buying a house. I can guarantee you right now, there's probably not a single person in BC that owns a home today that purchased 10 years ago that said, I made the biggest mistake of my life. It might have been hard for them in case they got laid off. Maybe it was tough for them because it wasn't particularly the best home for themselves. But at the end of the day, it was a good investment, no matter what you say. Now, the potentials, what's the upside of having a house? You can refinance, you can sell, you can pull equity from the property to get investments, to help your kids go to school, to get married. So all these things are positive. It's literally the bank's money that you're leveraging for a
Right.
few additional dollars on interest to be
Right.
able to like expand on the people that you care and love.
Right.
You wouldn't have that ability if you
That is the goal. So
10 years.
the reason I bring this up, and then Keaton, I guess you could kind of comment on this. The reason I bring this up, yes, if you look back long enough, 2006, yes, you'll see that over time the property value has gone up. So you'd still be ahead. But the reason I bring this up, let's say we're in that 2012, 2013 year, right? From this point to where we're at now, you would have actually lost money, right? So from
You only lose
2014
money if
to
you
Well,
sell.
no, we got to point something out here. So you'll notice that crazy graph you're showing.
yeah.
If you look at the 2008 to 2010 of the long line, that's the same dip. So we have to, that little itty bitty dip on the big line between 2008 and 2010.
This one right here, right?
That's one.
That crazy looking graph we're looking at that's been blown up. And this is part of
Right.
math and statistics, is they can be skewed a little by using a very narrow range to make this look insane.
Right.
Now, I'll be honest. I think that if unemployment hits like 12, 15, 20%, there's a very real chance the shit could hit the fan. But if that doesn't happen, or even if it happens to a lesser degree, we know that vacancy is very low. We know that more and more people are piling into less and less housing. So the only time I think we'll see that would either be if psychologically people felt that housing was so doomed that the best choice they could do is lose money or sell now at a lower price because it's better than waiting. Or
then
if those same
if
people
they're
are
selling at a
forced to.
loss.
Well, and many won't be selling at a loss. Only people who bought 2020 maybe to now. The reality is everybody else before that, it was a 30, 40, 50% increase depending on when you bought. So they're insulated. They're just losing imaginary money that they made and now they've lost. But the other thing I'd point out is, just to be fair, 2008 was a housing-related recession due to mortgage-backed securities and the American banking system getting real cowboy with mortgage-backed securities. And basically they were using loans at a very low rate for a period of time, and then they triggered to a significantly higher rate. So somewhat like what we're seeing now with people who took 2021 rates and will be renewing. But on top of that, we saw foreclosures go through the roof, and we saw fear that the entire US banking system was going to fail due to housing, which then spilled globally. I would argue that we're not in the same situation, and that I would argue that in a situation where the housing market is threatening the collapse of the entire banking system, of course the housing market's going to suffer immensely. Whereas now we have a different set of problems. We have inflation. We've had our currency has lost, what is it, 80% of all Canadian dollars are created in the last 4 years? Like, stupid. So we have a case of housing prices are high because the dollar's worth a lot less. And we know this because carrots, broccoli, food. The reality is it's not that things have necessarily gotten more expensive. They have. But the reality is it's more so that the dollars we use to buy it are worth less. And I know it's the same thing. It's opposite sides of the same coin. But in that scenario, hard assets tend to perform better. Well, what is real estate? It's a hard asset. And that's why we've seen money flock there. And I don't know what the future will be. I'm not here to say that the Canadian market will never crash. I just am saying that it would take an immense amount of pain to cause that to happen, because people either do it voluntarily if they feel there's better options, or they'll have to be forced to do it. Well, voluntarily, I think we all agree that being a renter sucks in Canada. No real rights. Rents are almost the same cost as owning, so you're not really getting any financial relief, and you lose a lot of stability. So anyone who has the privilege and ability to own tends to want to protect that. So then we go to the second scenario: is what would it take to force a big enough percentage of homeowners to sell in a quick manner in a position where there are no buyers, which would cause a drop in prices? The only thing that I could see really causing that would be either, yes, rates going to 10, 12, whatever percent, or mass unemployment. But is that going to happen? I don't know. I don't have the education, the skill set, the information to predict that.
Yeah. It's not rates. I don't think rates are going to go up, even if they try to scare people. And with the rates are going up, I don't think that's happening. But yeah, it would be a weakening of the labor
Well,
force.
pull
right?
up if you could, or I'll find it and send it to you. If you look at the rates in the 80s,
It went high.
once again, you want to
80s.
compare though, like scary graphs.
Yeah.
Rates spiked, they dropped, and then they doubled.
Right.
So like I think rates off memory like hit like we'll call it 10%.
Yeah. I think
Everybody probably suffered immensely in the early 80s. And then they came down.
Mm-hmm.
And then they went up to 18, 20%, whatever. So once again, you could argue, you could take that graph and be like, well, what if this is a false bottom, a bull trap, and then rates go to 12%? Well,
yeah, it's not going to go that well. It's not going to go that high, and I think the difference is back then the cost of your housing relative to your income wasn't as big of a difference as it is today, right?
It was like 2 to 4 years salary to buy a house. Now it's like,
Right.
you know, what's the median salary in Canada? Like 70 grand, 60 grand,
$50,000.
10 times,
10
20
times.
times in some markets.
So that's part of the reason why I don't think the rates will go as high. But yeah, pretty much what I'm looking at is the labor force. If that weakens, then there's some concern. But otherwise, yeah.
But here's something I can speak of anecdotally. Alberta has more regular people, more of your traditional labor force that own. BC, anecdotally, you don't have many grocery store clerks, store managers, like even blue collar workers buying houses. And that's not because they're not deserving, but it's because it's fucking expensive. And the reality is it's a upper top 1% privilege now to buy a property in the Lower Mainland as an example. That's just the reality of it. Very few people are going to have regular jobs, save up. Let's say they want to buy a detached house, just to pick on an example. Detached house, Karn, what's just a going entry level detached house in Lower Mainland? Like 1.2, 1.3?
Yeah, 1.2 to 1.4, depending on where you buy, right?
So, you know, even if you go Chilliwack, it's close to $1 million.
Oh, it's right around the $900,000 range.
So anywhere that it's over $1 million, you would need a minimum $200,000 down to buy that place. There would be at best case an $800,000 mortgage. Let's say it's $1 million on the dot.
Yep.
You need about $170,000 to $180,000 of income as the banks recognize to qualify for that, assuming you have no debts. So what percentage of homeowners fall into these groups? Now, the regular people who probably bought 5, 10, 15 years ago, they're insulated. They bought when it was $700,000 for a house. So I think part of what we have to look at too is, sadly, not the average Canadian, but the demographic or sample of Canadians that actually own in these specific markets. And at the end of the day, if we get 25% unemployment at the bottom 20% of kind of the wage spectrum, they're probably not homeowners in the Lower Mainland. But another perspective to consider is we've talked about homeowners. What about investors? What if 30, 40% of Canadians are like, we're not paying rent anymore, we can't? You know, I think that there's a very vulnerable sector there, because how many investors can afford to not collect rent for 2, 3, 4, 5 months? So, I think that it really is specific to the bands of the demographics. And I don't mean population or skin color, but rather I mean, are they owner occupied properties? When were they bought? What professions are there? Versus, are they investment properties? When were they bought? It'll be an interesting one to say the least. But
yeah, then honestly, it goes into market segments, because that's what I look at when I'm listing a property. Is what is the segment? What does my buyer look like for this specific property? What do they earn? What do they eat? Where do they drive? Where do they want to live? What did they sell to be able to pull the equity together to put as a down payment? Because most times when people think if they're going to go in and buy a $2 million house, you're not just putting 20% down. It's not just 600, 400, $500,000, whatever the number is. Most people are coming after selling and having a bunch of equity, maybe up to $1 million from the last property, to put into the new property that they're buying. So they're still left with $1 million mortgage. Nobody's carrying a $1.5 million mortgage after buying a $2 million house. Not many people that I know of. They're usually putting a lot more down because their income is not going to supplement the mortgage. It just won't go through.
To get a $2 million mortgage, you need close to like over $400,000 of income. So the reality is that who is that?
Who has it? Yeah, you don't.
Lawyers, maybe successful dentists, doctors. It's a pretty niche.
Yeah. And then what? The demographic gets smaller and smaller. Now, when you go to parts of Surrey, You have houses that are brand new houses that are $3 million. And the entire neighborhood is between 2.5 and $3.5 million. Now, I've knocked on those doors. They don't look like doctors. They don't look like engineers. They are business owners, but they must have sold something to pull that equity together to be able to afford that property. They didn't just earn it, save it, have it sitting in the bank account when they're ready to buy a $3 million house. It was essentially picked up from the property valuations going up, pulling it all out, and then just reinvesting into a property. And then also it helps them in the case that some of these houses have 2 suites. You're getting about $2,500 per suite, 2 bedrooms each. So $5,000 of your mortgage is being supplemented just through renters. Now, if your mortgage was 10 grand, it's cut in half to 5. Now the average couple can't afford that house. It's a $3 million house because they put like $1 million, $1.5 million into it. You know what I mean? So there's ways to do it. And I've done it with my clients where they refuse to buy a house for themselves. We've gone out and bought pre-sales, or we've gone out and bought investment properties out of the city that they're comfortable, and they continued renting, waited for the market to go up, and then pull that equity, like pull up all that appreciation, and then eventually buy their home, which is some of the smartest things that some of these people have done. Because they're like, why would we sacrifice our lifestyle? We want to continue living here. We'll just use whatever money that we have in a city that's so far away from us, hire a management team, and just let our mortgage get paid down by somebody else, let the appreciation happen just generally with the market. And then when it is time to sell, that amount of $50,000 or $100,000 that has gone above, they haven't been able to save $100,000 over 2 or 3 years. Like, who's doing that? But they're saving the $30,000 over 2 years, $15,000 a year, maybe $1,000 each, right, per month. But now they pulled the additional 100,000, and now they're able to afford that condo. So it comes down to more about planning and less about, oh, I'm never going to be able to afford it. There's CMHC programs, as you know, Kurt, like Keaton, we can get into 5% and get a insured mortgage for a property, right? And it falls within certain parameters. It might cost a little bit more, but in the long run, if we break down the numbers, that's what I'm always looking at. What are the numbers to actually make it a successful purchase and sale versus something that's going to be detrimental and they're just losing more money over time?
I actually just recently did a full analysis of this and compared the idea of challenging financial norms. So I got a skill testing question for you guys. I'm going to spring this on you. Let's say you had $100,000 cash and you need to buy a new vehicle for your business. You go to the dealership. They say, hey, you can buy it in cash or we'll finance it at 6% interest over 6 years. So the amortization is 6 years. You go to your financial planner and say, hey, if I have $100,000 cash, what can I do? And they say, oh, well, guys, you could put it in your TFSA and you could earn 4% interest per year. Would it be a positive financial decision to finance at 6% interest over 6 years to invest at 4% in your TFSA? Or would you be better off to just buy it in cash and not pay the interest?
Oh, you know what, man? So this comes down to cap rates. Are we fighting inflation with these cap rates or not? I don't know. I haven't done the math on it. Like, if you show me the numbers,
What's your gut feeling?
my gut feeling is it makes so much sense to just have that payment and put it for 4% and you're only losing 2% versus and having cash liquid for you to use when you need to use it versus just putting it all into a car. Like, that's what makes sense to me. Like, I'd rather have liquid cash available for me to use.
So the question was, instead of buying the car, you put the money in a TFSA, which gives you 4%, and then you're making payments on the car?
Yeah, you would pay off the car in 6 years at 6% interest.
Okay. Yeah, I mean, I think that makes the most sense, right? Because of the 2% difference.
So you're saying it's better to buy the car in cash?
You're
You're financing 2% higher than the return you're getting on the money. Because you're not earning 6%, you're paying 6% for the privilege of investing your money at 4%.
Right. I don't know. Cars is like the one thing I don't finance, period. So I have like these rules that I play by. So like even just this conversation, like finance a car is like, who does that?
So the irony, if
I own
you
my car.
finance the car at 6% interest over 6 years and invest at 4% in the TFSA, you would end up with, if we look at the total growth of the 100,000, that's about 28,000. If we look at 4% over 6 years, If we look at the total cost of the $100,000 car loan over 6 years at 6% interest, it's about $19,000. So you actually end up with $7,000 more net worth by having financed the car and invested versus just buying the car in cash.
Mm-hmm.
So I use this as the baseline of, once again, this is a specific example that uses amortization to show that you have to think of what the average debt is over 6 years
Mm-hmm.
versus the average investment. The average investment is going to average over 100,000 because that's what you start with, whereas the debt's being paid off.
Mm-hmm.
But I use this as an example to show people that you can't always trust your financial intuition. Like often when it comes to compounding interest and complex numbers, our brains just don't work well at it intuitively.
Mm-hmm.
And that's why so many people suck at the stock market and so many people buy high and sell low, even though they think they're savvy investors. So I use this to question, hey, are you better to take a 25-year mortgage or a 30-year mortgage? The 25-year mortgage on a $500,000 loan would save you $80,000 to $90,000 of interest. Your total interest cost is 20% lower, but you're not able to invest. So if you take the 30-year mortgage, you have a $207 a month payment. That's how it's lower by $207 a month. So what if you invest that money over 25 years? If you earn 10%, which is arguable, but if you did, you would end up $100,000 ahead by taking the 30-year mortgage at 25 years, taking your investment, paying off the debt.
Mm-hmm.
If you let it stretch to 30 years at 10% interest, the 30-year mortgage comes out about $180,000 ahead. So then the next thing that I dove into was, well, hang on a sec. That's putting 20% down. What if you put 5 or 6% down, paid the CMHC insurance, have a higher payment, but then you've got, let's say, $60,000, $70,000, $80,000, the difference to invest. And in that scenario, you end up almost $800,000 ahead at 10% interest over 30 years. So I linked you guys the article. I did all the math and broke down returns like 4.5, 5, 6, 8, and 10%, because obviously you can't assume you will earn 10%. And then for the interest rates, I use 4.75 over 30 years for the insured mortgage, 5% for the 25-year mortgage, and 5.1 for the 30-year, which I would argue is a fair average over 25 to 30 years. It's just at the bottom end of where rates are hitting now, but I think we'd all agree we probably expect rates to drop over the next couple of years. But I think that one of the things that Canadians need to do is we need to start getting savvier. And one of the advantages I would argue that new Canadians have is that if you come to Canada from somewhere else, you probably come here going, I don't know how things work. I'm going to learn. And you probably go to professionals and get advice and you learn. The disadvantage that many second, third, fourth generation Canadians have is that they assume they already know. And we see
And they
this.
rely on the school system and they blame the school system for not having taught them instead of picking up a book and reading about it or going to a professional to learn about it, like you just said.
Well, like how many people fear getting their credit pulled? Makes up 10% of your score. A single credit pull will move your score 1 to 3 points. Yet don't know that if you have a $2,000 Amazon card, like a card used for online shopping, if it reports over 40% of the limit, that makes up 25% of your score. It's called utilization. So how many people know a little bit and they focus on that little bit, but are completely oblivious of the bigger picture?
Yeah.
I think that it's something that, the whole world probably needs to focus on is financial literacy. Another article I wrote was about how damaging overspending can be. And how if you overspend by, let's say, a $100,000 a year earner misjudges what their taxes will be and says, I make $100,000 a year, I can spend this. And they overspend by basically $9,000 a year. After 3 years, they're going to have about $36,000 of debt at 12.5% interest. If they cut their lifestyle by over 25%, it will take them 5 years to dig out of it. So how, it's one of those things that we often underestimate how damaging a very small amount of debt can be. And I'm not saying $35,000 of that's small, but that's 3 years of, $800-900 a month of overspending, which with the cost of inflation and everything right now, I think is very easy for a family to overspend that. So I think it's important that we become more aware because then we can make better decisions and more decisive decisions. Sometimes you do need to sell and waiting is only going to hurt you, as an example.
100%.
Throw the math in, everybody gets quiet.
Yeah. Well, that's what it is, right? All these decisions obviously come down to math, right? In my mind, I'm like, why would I buy a car when I could put that money into an investment?
But let's say you've got a landscaping
That's why
business.
you don't drive a nice car, Rahul.
That's
God.
why I don't drive a nice car, because I'm
That's
like,
why you
yo,
don't have a Lamborghini, okay? God, get with the program.
that's what's like you're buying $100,000 car. I'm like, wouldn't do that. Wouldn't even question that.
What if you own a landscaping company, you need a truck?
then that's a different story. Because then that will actually make me money. So I would buy the truck, right? But would I do it cash? No, because then the business
I
is
hear you, man. I sold my car when I moved, but when I was 21, I bought a used Mitsubishi Lancer for 10 grand. I moved to the oil industry. I paid it off in 3 months, and I had that car until I moved to Alberta. You know, I was a married adult at that point, going to buy my first house. Still had the same shitbox car that I'd had since I was 21.
Yeah.
I'm a believer of, we often overspend where it is unimportant or it's a vanity thing, and we often put way too little energy and resources into what matters, which is typically our future, our financial stability, our retirement. And you know, sooner or later, everybody, one generation needs to tough it out to help all the future generations.
100%.
You know, in my family, that's my generation. My parents don't have a pot to piss in, as they say, and they'll never retire. And I realize it'll be even harder for my kids than it was for me. So I choose to make sacrifices now. And an example, small sacrifice, but I moved to Alberta because I knew that if I stay in BC, the cost would just, I would never be able to get ahead far enough to help my kids. And I think that, you know, everybody needs to think of their own version of that, and everybody will have a different situation. But the biggest thing is understanding where you are and what your needs are. And most people don't, you know, they never delve into that because it's scary. But I have a trick for everybody who's stressed about finances. It's something that I found works really well with clients, and that is most people hate to do their bills, their budgeting, their saving. So it'll be different for everybody. Maybe it's a cup of tea for some, maybe it's a glass of wine for others. But depending on the severity of your needs, if you're really in a bad situation, do this weekly. If you're in a good situation, do it monthly. But pick a day, let's say Friday at 7 p.m. when the kids go to bed or whatever, 8 p.m. Some people probably laugh when kids in bed at 8 p.m. But and you go through your finances, but you associate it with your cup of tea, glass of wine, whatever it may be. You do it with your partner if you have one, because okay, for the first 2, 3, 4 times, it might take an hour and it's going to suck. But if you consistently chip away at it, very quickly you'll have your debts under control. At least you'll have a budget together, or payments. You get to a certain point where doing all of your financial chores takes 15, 20 minutes. And then it's done, and then you get to enjoy an evening with your partner watching Netflix or whatever it is. And very quickly you go from this stressful thing you want to avoid to, oh shit, Karn, it's Friday. And Karn, what's Friday? Oh, we do our bills. Why would you be excited about doing your bills? Well, my wife and I, like, it takes us 10 minutes because we do it every month. We got fast at it. And then we have a bottle of wine, hang out, watch Netflix. Right? It gives you that. You look forward to it because you absolve all of your financial stresses because it's done. You've dealt with it. There's not an unknown there. You know exactly where you're at. It's done. And then you get to enjoy your evening. And you associate it with kind of a treat or a reward. And I've actually found it really effective to take people that struggle to budget and to follow this. You know, as long as you make it strictly a chore, it will always be a chore. But when you associate it with some sort of reward, they push through that, and all of a sudden, all of that stress and weight disappears. And I'll be honest, this solution or this trick is not going to work for someone who is spiraling. If the cost of your lifestyle is $2,000 or $3,000 a month more than you bring in, this ain't going to help it. But at the very least, it will help you get to a level of understanding where you realize this is not sustainable and something needs to change.
It's creating the narrative. It's creating a positive narrative to what you're actually doing, and having the perspective of this is not a chore. This is actually good for me. A lot of people, we talked about this last time with a couple of guys, portfolio planning, and the biggest stigma is around talking about debts or talking about money in even our community. Nobody wants to talk about money because it's somehow a taboo topic. But you're making it sound, you just made it sound like a dream, like you're cuddling up with your girl, right by the fireplace, got some wine, something non-alcoholic for guys like me, have some popcorn, watch Netflix. It's done in 10 minutes. And then it does become relaxing because at the end of the month, you know exactly what you brought in and what is going out. And the next month, you're making a plan to make any changes because, as we know, heating bills will change, AC bills will change depending on the season. Clothing, food, all these things based on inflation, they're going to go up or down. So if you're on a fixed budget, then that is something very important. Now, I think the three of us, we're pretty lucky where we just have to manage the amount of work and deals that we bring in to be able to have like a comfortable lifestyle. But people that work jobs, yeah, they're on a monthly or bi-weekly paycheck, and they should spend a little bit more time and opportunity on just doing these things one by one.
100%. It's I think that if you don't pay attention to something and it becomes an unknown, that's where it becomes scary. And it's often the unknown that is more challenging than the actual problem. And it is the unknown that you causes the fear and the stress and the anxiety. At the end of the day, I find most people, if you could just simply say, hey, you could plug it into the magic computer, they show up, hey, this is my problem. You scan them and you're like, oh, hey, if you do this, this, and this, your problem will be solved in 2 years. Most people can do the this, and this. It's the getting to that's the hard part. And the problem is there is no magic computer that just says, hey, here's the solution.
Oh, it's going
I
out
think
and getting the information and talking to the professionals. Sometimes you got to pay to play as well.
Yeah, we actually talked about this on the last podcast with the financial advisors, where the whole psychology and people's relationship with money could be like a whole separate episode, because it's like this never-ending spiral, because people's relationship with money is just so terrible, right? So sweet. I think I don't know, is there anything else you guys want to chat about, or should we call it there? Because it's been an hour and a half we've been going at it.
Yeah, really. Wow, this was really fun. Time flies when you're having fun with a couple of buds, eh?
Keaton, is there anything else you want to add on to this?
I guess my best advice to people in general, whether you're in a hard position or a good position, is that at the end of the day, awareness is what will lead to opportunity. And it is, I'll give a blunt example. If you're in a position where your cost that you cannot bring down are $1,000 more a month than you can bring in, and there's nothing you can do to solve that, you cannot make more money, you cannot spend less. If you cannot figure out a way to definitively solve that in 3, 6, 12 months, maybe the absolute maximum, you need to make hard decisions. It's just, that is the reality of it. Ignoring it will lead to bankruptcy, a consumer proposal, losing your home, whatever it may be. And I don't want to sound heartless. I don't want to sound cold. I went through it as a kid. It's awful. But if you are proactive and if you see the inevitable is something bad, the version of your life where you tackle that inevitable 6, 12 months early is often far better than if you wait until the bank's knocking on your door and says, hey, you're out. So, whether it's ability to keep up with your rent, there are resources and people that will help, absolutely. But I think that one of the mistakes that we make as a species is we're almost hardwired to avoid change and try to ignore problems. And we see it regularly. And, another example is, as a broker, one of the things I refuse to do is allow people, I just refuse to do it, to allow people to take on private financing if it will not solve the issue, if they cannot solve it. Simply borrowing all of the equity in your home at a high interest rate to buy 6 months, I use the example of, I view private financing like financial chemotherapy. And if it can solve whatever the issue is, the ailment, it fixes the roof or whatever it may be and allows you to be in a position to move forward, great. It's a solution. But simply using high cost debt that is very lucrative for brokers and lenders, so they push it, using that to simply buy 6 months because, things will be better in 6 months. And when you say how, they say, I don't know. It has to be better. It has to get better. I can't do this anymore. That's not doing a favor for you. And it's something that I professionally refuse to do.
Yeah.
So be honest with yourself, get help. Lots of people will help if you just ask.
So again, man, that's the best advice. Don't have a negative stigma or a taboo around money. It needs to be discussed. It's the one thing that's actually keeping everything going around, from paying our bills to eating food and having a secure lifestyle. Get it sorted out. Get yourself budgeted, put everything on track, make those payments, save that money, give back to the community, whatever needs to be done on a daily basis, whatever needs to be talked about. I'm here as a realtor. Keaton is available to talk to you. He's a mortgage broker. Rahul just likes to talk to people. He's generally all around good guy. Reach out to all three of us. We'll put you on track.
We'll connect you at the very least. We'll connect you to the experts or the right people. So
yeah, and
got a huge list of people.
Yeah, part of this entire process is just not connecting ourselves. We're obviously looking for information to help our clients out, but then also, through this journey, we're able to connect people and having a Rolodex of professionals that can actually do something that's going to benefit the ones around us that we care about.
100%. Guys, let's leave it at that. Keaton, thanks for making time to do this. Karnveer, you as well, as always. And hopefully we can do another one in about a year's time. That's usually our goalpost is let's check in with our guests a year from now and see if thoughts and things have changed. So appreciate
Sounds
you
good.
doing this, guys. If you want to get in touch with Keaton, I'll share his Instagram, his links in the description. You can find him on, what's your Instagram handle? Is it just Keaton?
No idea, man. I use
Okay.
Facebook.
I'll share it in the description, and same with Carnveer. We'll share the information there. Like, comment, subscribe. If you have any questions, ask away in the comments and we'll try our best to answer them.
Also,
Cheers.
if you want to get on the show, tell us why. Give us a reason to bring you on the show, because we love having these type of conversations.
Sweet. All right, guys. Thanks again. All right, Keaton, appreciate it. Karn,
Anytime.
thanks. We'll chat soon, okay?
Thank
Bye for
you.
now.
Bye.
Guys.
One of these days we'll have to cover how to make the interest on your mortgage tax deductible. I was like, we're not bringing that one up on this
Yeah,
one.
that's one I'm interested in. So yeah, we got to talk about it on the next one.
Okay, cheers, guys. Bye for
Okay,
now.
all right,
Cool.
thanks, guys.
Bye.